Are you looking at the best way to go about investing $100,000 in today's market as a real estate investor? Then guess what? This video is perfect for you. And after watching this video, you're gonna learn the best method that's gonna help you grow your portfolio, help you sustainably scale it, and give you the opportunity to live a much better lifestyle than now, and essentially talk about what we've done starting off our investment portfolio to where we are at today. And it's all gonna begin right after this. Hi everyone, Josh Tavares, investor and realtor with eXp Realty Brokers. It'd be so nice if you can help us out and hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And if you guys are looking for great cash flowing investment properties at a great cash flow, appreciation, with great landlord-tenant board rules on your side, as well as having the ability to not be as involved, then guess what? This is a great opportunity for you. If so, click the link below and let's book an appointment and get you on your way. And let's all begin right now. Now, one question we get often from investors is what's the best way to go about investing in $100,000, whether it's in cash, equity, or anything as such. For those of you who may not know, to give a little bit of context, we have our primary residence here in Toronto. About 4 years ago, we refinanced and we ended up pulling that equity, which is about 120,000 Canadian at the time, and used that to purchase our first rental property in the Niagara region. And we used that as a down payment. And then we were able to receive additional financing based, of course, on our credit score, income, and so on and so forth. And essentially that's how we got started. And then from there, we continued to grow our portfolio from there through different means. But we started with about 120,000 Canadian through equity of our primary residence. And today I would do things a little bit differently given how the market has changed and now the information that we know about different markets that you can invest outside of Ontario. If it was today and we had the $100,000 to begin, we wouldn't be probably investing in the Ontario market. We'd probably be going south of the border in the US in markets where you can purchase a property outright in cash worth less than 100,000, having the property be able to sustain a 1% percentage in terms of having the rents be 1% of the value of the property when purchased, having a much higher probability of cash flowing and building appreciation, and so on and so forth. Now, properties in Ontario are fantastic, have great economic fundamentals with many economic drivers taking place. However, finding a property where the rents are going to be 1% of the purchase price are going to be very challenging, especially in the residential space. Now, you might find rents in the 0.5% to 0.8%, but it's going to be really challenging given that a lot of these properties are going to be worth 500,000 upwards to closer to $1 million, and that rents could be about 2,200 all the way as high to about maybe $4,000, but that's not going to be 1% of the close to $1 million price tag that some of these properties contain. Now with the $100,000, you want to make sure this property has minimal maintenance. You want to make sure that this property can definitely cash flows, great appreciation, has great economic fundamentals, that has the ability to continue to grow your portfolio, not only from a standpoint of having the property grow in cash flow, appreciation, and so on, but having the ability to use that property to leverage, as we've spoken about before, and having it be a tool so you can purchase more properties from the one. Now, for most people out there, they're probably saying to themselves, well, why do I need to purchase a property full in cash for $100,000? Why don't I just put 20 or 30% down and then have the other, let's just say $70,000 as a loan? That's a very good question. However, the thing with this is that we're looking at scalability and the ability to grow your portfolio in a quick time frame while still keeping cash flow on the table as well. And by going about leveraging it this way, it's going to be a lot harder because it's going to take a lot longer time frame to go about having your portfolio in such a price point value that you'll be able to leverage in a short time frame, because you're already getting a loan on the property. You don't have a whole lot of equity, so it makes it a lot more challenging to go about scaling your portfolio in a short time frame. By purchasing the property full in cash within 6 months to a year, you'll be able to pull out that equity, purchase another property, and then eventually have those properties purchase more properties for you through the form of equity. Now, I will say when you're purchasing in cash, the properties are going to have significantly higher cash flow than when you refinance. Now, let's say officially when you purchase the first property, it's probably going to have about $500 to $700 in cash flow. And after refinancing, that $500 to $700 in cash flow could go as low as to about $250, which is not as enticing. However, this property allowed you to multiply to other properties, is still growing appreciation, still has strong economic fundamentals, and you're still able to find great tenants that are still going to pay for everything for you. And in these markets as well, Property tax, insurance, utilities, and a lot of these things are going to be at a lower price range than in some other markets where properties are going to be substantially more expensive. By keeping everything low, that's more cash flow in your pocket and more that you can use towards scaling your portfolio, adding other income streams, or the ability to have more money saved, set aside, of course, for your own lifestyle, or have set aside in the event that there is a massive maintenance that needs to take place, such as a roof repair. You'll have access to that. As an investor, whether you're new or experienced, you always need to have reserve funds because at a moment's notice, you can have some sort of a leak, you could have a roofing issue, a plumbing issue, electrical issue that can cost you multiple $1,000s right up front. And that could really hinder your cash flow as well as your reserve funds. So it's very important to always have reserve funds and not put everything into your deals. This is something that some investors do, unfortunately, that puts them in a very hindrance spot, is that let's say they only have access to combined total of funds of everything, let's say 150. They'll purchase something and they'll go all in with the 150, but then in the event that something takes place, they have no funds, puts them in a very vulnerable situation where they may need to sell the property in a short period of time. And then another investor who was very strategic at knowing different contacts to find these type of people who are very vulnerable, purchase the property at a fraction of the percentage of what the other individuals did who went all in at 150. And then they'll be able to leverage their resources, which would be significantly lower than the original owners, to go about leveraging that property, purchasing, adding it to their portfolio to help them grow and scale much more strategically and sustainably. Now, I know $100,000 to some investors watching today might be thinking that's pretty much nothing. You can't really do much with that. It's not even a down payment in some markets. And you're right. And that's why we're all about going about leveraging the most you possibly can. Because if you can purchase a property full in cash that has the ability to scale for you in a much shorter time frame, then you can definitely do so. However, I will say that the Ontario markets and other markets, even in the US and in Canada, which have higher price points, still have a lot of great potential and still will give you a great return with great tenants and great economic drivers and everything as such and help your portfolio. Now, you may not be able to grow as quickly, but I will say that you'll have the ability to have a sustainable asset that'll continue to grow over time. Like our first rental property, it generated a combined total of $2,400 between the two units. And funny enough, today, just the one unit, which is a 3-bedroom and 1.5 bath today, could generate upwards to about $2,200, which is almost the complete income that we were receiving when we first purchased the property, not including the basement suite. Now, if both units were to actually be at market rent today, we're probably looking close to about $1,000 in monthly cash flow. Unfortunately, we're not fully in the market rent, but I will say we're in a pretty good standpoint given what we were receiving when we first obtained the property. And that's one of those things that some newer or less experienced investors tend to forget, that over time, your property is going to appreciate as your rents are increasing, the value in the equity is increasing. Even in the circumstance that we're in now with the market shift, yes, property values are still going down. However, if you do have a mortgage on your property and you are paying it down, you're still building equity even if the value of your asset continues to drop as interest rates are rising. And even with interest rates rising, it's just going to make properties drop a bit in price and give you an excellent opportunity to go about purchasing properties at a time where many people are scared to go about growing and investing in real estate. In any investing space, it's always like that. You always tend to have people who always follow the herd, and then the herd tend to invest when it's too expensive. And then when things dip, they tend not to do much. Where the smart investors, when things are at their peak, they don't put their money in until things take a massive decline, and then they put their money in, grow their portfolio, whether it's through stocks, equities, real estate, crypto, anything, you name it. And then that's where they make their riches, and they just wait for these market shifts every 5, 10, 15 years, and they capitalize on it. And no other asset can you have $100,000 in cash invested into one and help you grow a portfolio of over $1 million or multi-million-dollar portfolio from the initial investment. And there's many different investors, not only do we know, but also on social media and everywhere, who started off with similar numbers and have grown their portfolio sustainably to having a portfolio worth multiple millions of dollars, starting off in residential and going all the way to commercial, even purchasing land into developments. These are things that you can't do with stocks, with gold. You can't do it with crypto. It's very, very challenging to do with those other assets. Now, I'm not going to disregard those assets because those are fantastic assets that you can purchase with additional cash flow you have from your rental properties. Buy these type of stocks and equities that have great long-term potential. buy and hold and continue to do dollar cost averaging, continue to invest into it, every couple of weeks, every couple of months, even if the market goes really high, goes really low and dips, continue to do so. And over time, your stock portfolio will continue to do really, really well alongside with your real estate portfolio. Now, look at that. From real estate investing, you had the ability to purchase multiple properties from one, and the ability with the additional funds you have to invest not only into your own lifestyle, sustain your lifestyle, have a better lifestyle, but have the ability to purchase other asset classes so you can hedge inflation or any type of massive economic shock that could take place at any time. And like I said, by having a property that's $100,000, it doesn't necessarily mean that you're going to have very little to no cash flow. Like, there's some people who invest into $1 million rental properties in Ontario and are receiving zero cash flow, and they're probably receiving actually negative and pulling out every single month out of somewhere, where some of these other individuals purchasing in a much lower price range, like in the areas we're investing into, have a much higher cash flow, even though the appreciation might be a little bit lower, right? However, you have the ability to have that cash flow and you still have the appreciation and everything alongside with all the economic fundamentals that are taking place that are benefiting your investment. And as your real estate investing begins, I recommend personally is to hire a property management team, even if it is your first property, because life happens, things get really busy, especially if you have children, if you have multiple projects, work gets pretty busy, things happen in life. And by having someone, even if it's 10% of your gross rents, it's worth having someone maintain and having someone look after your tenants and your property, because it can be a lot of work, especially if it's not that close to where you're currently living, to go about worrying about tenant concerns and property maintenance concerns and anything of that such. Like in our rental properties with property management, it ranges between 8% and 10% of gross rents. We will all day pay for that versus having to go stop what we're doing, drive all the way to the property, having to know contractors, look after the contractors' work, make sure things were done properly, make sure the tenants have done their work of paying on time in full and everything is such, where we could have essentially avoided that by hiring someone, giving away some of the profits so we can live more sustainably into a lifestyle that we prefer and personally will be better for you and your family as well. You'll be able to have more time with your friends, family, be able to see your children grow up and be able to work on sustainable projects, be able to travel more, not have to worry so much. And to be honest, very few times have we actually gone on a trip that we've had maintenance concerns or anything crazy as such in terms of our rental properties, because everything was just kind of taken care of and we didn't have to, stop what we were doing to head a flight back to Ontario to deal with any concern. And another thing that we love about these properties is the fact that tenants have to go about bringing their own appliances. So most of the time, a lot of our maintenance concerns are appliances, whether it's a dishwasher, whether it's a washing machine, a dryer, anything as such. So that's an issue now of the tenants. They'll have to pay for their own repairs in regards to that, and they're going to be paying for their own utilities. So you're maximizing cash flow, you're reducing obligations, you're reducing your maintenance requests, which is only going to help you grow your portfolio and live a much more sustainable real estate investing career and better lifestyle. And I know for many people, they're getting scared at this point in time and saying, why should I invest in real estate? Everything keeps dropping in prices and so on and so forth. But this is actually, like I said earlier, a fantastic time to get into the market because it's only going to get cheaper. Eventually, things are going to get better economically. They're going to become more expensive, and you're going to be really disappointed at the fact that you weren't able to get in when things were low. It's like investors who got into the market in the 1990s, where properties in Ontario were only a couple $100,000 in Toronto, and now some of these properties are worth like $2.5–3 million. So it may have been a difficult time. At times, things could have been frustrating as a real estate investor, but for those who really held on to their properties, took care of them, and were able to hold on to them until now, are the ones that are seeing massive fruits to their labor, to their loins, and have the ability to do so much more in their lifestyle, just for going through a bit of that rough patch or just kind of holding on during that time. And look at them now. They've got properties, probably multiple, worth in the millions, that they'll be able to sell at any time and use those funds into a wonderful retirement, or be able to use to grow a portfolio that's lower in price in the Detroit market or the US market, have the ability to scale in a much different time frame by just selling one property, being able to purchase 8 or 9 properties at one shot from selling one property that they had multiple years ago, have enough income from all those cash flowing properties to not really have to worry about much financially for some time, or really ever, given how high the cash flow will be and so many properties that will be attached to that property. I hope this video was super helpful and insightful and gives you a really good idea as to what we would do with $100,000 and helps you with beginning your journey with real estate investing. I'm Josh Tavares, investor and realtor with eXp Realty. Remember, it'd be so amazing if you can help us out. Hit the like button, hit the subscribe button, hit the notification bell to get updates on our newly uploaded content. And if you guys are looking for great rental properties, great cash flow, the ability to scale, great appreciation, hit the link below and book an appointment, and let's partner together to help you grow your portfolio without having to worry, while still getting the cash flow, appreciation, everything that you want in real estate. I'm Josh Tavares, investor, realtor with eXp Realty Brokerage. Take care. I'll see you next time.